Good afternoon and welcome to Bull Market Stock Show. This is your host, Rian Hobson, and we're doing today the Nasdaq, and that's actually a very important indicator that I need to share you with the Nasdaq. And it's actually something personal also because it actually bit my fingers the beginning of this year, and which I will also share with you my experience with this specific indicator. But it's a very important indicator because there's a very strong relationship with the Nasdaq and this indicator that I will share with you. But before I get there, please do subscribe for my YouTube page. And then also you can write your comments here and I will answer them. But before we get to today's show, I just want to give you a bit of a market roundup. With the ECB yesterday, the ECB was dovish as we expected, but I think definitely that dovish sentiment of the ECB was priced in, and that's why you didn't see much movement of the euro. On the other side, the German manufacturing news came out quite strongly. The manufacturing PMI, it was forecast for 64.2. The actual came out at 64.2, and the euro area, the services PMI, also it was actually well. The other thing is the euro manufacturing PMI came out a bit bad, but the German manufacturing PMI actually came out strong. Euro's service PMI came out strong. German also services PMI came out strong. Asian stocks fall this morning. That is that they speculate that has to do with the slow progress of the vaccination progress that is actually happening. The euro area and British stocks are actually doing well. On the opening, I thought that it will also fall based on what happened actually in Asia, but that was not the case. Very importantly, you must actually also check out 2:30 p.m. There's the Canadian retail sales that come out. So please, those guys that love to trade with the Canadian, please check out that retail sales news. Now, get to today's story. Very important. That is now the Nasdaq. Now, this is actually a pattern that I want to share with you. I'm just going to share my screen. Just one moment. Yep, there we go. Now, this is actually something that I picked up, and I actually been doing this for quite some. And I know now I've been talking about the bond yields quite a lot. I'm just going to zoom this in for you so you can see. I've been talking a lot about the bond yields and that you need to check out this bond yields. Now, this is a chart actually of the Nasdaq 100, and then it's a 10-year bond yield. Now, recently you will see that actually this is in blue is the Nasdaq 100, and then you have the bond yields actually that is in black. And as you can see, the bond yields are dropping. That is where the Nasdaq moved. And then when actually the bond yield was climbing very sharply around March, April, that is where the Nasdaq actually went down. And then when bond yields were tilting down where it is now today, you can see actually a very strong relationship there that the Nasdaq went up. Now, the thing what was most confusing, and please, you need to follow this because there's a sequence that I need to explain. Now, normally, okay, let me explain first the bond yields and the bond prices. And I know this is actually can get a bit of can actually be complex. Now, the bond prices actually and the bond yields moves in opposite directions. For example, if you have the bond prices that go up, then you have the bond yields that go up, especially on your 10-year. All the bonds actually work like that, but the 10-year is just one that we focus on a lot. So the bond prices go down. If the bond prices go down, then your bond yields go up. And also when your bond prices go up, that is where your bond yield, when your bond prices go up, that is where your bond yields go down. Now, what we need to look at is actually what drives the bond yields to go up. And in the beginning of this year, if I just put that in, this was now to do with the US inflation. Now, there's actually a sequence that goes in, so you need to follow this. Otherwise, you will be totally lost. All right. So the main thing is you can see here the inflation dropped sharply, and that is where this is now all to do with the pandemic, and that is where the bond yields dropped. The Nasdaq also dropped, but then the Nasdaq just flew up, and then you have inflation that was creeping up, which is now in yellow. Inflation also goes up. Now, very important about the bond yields. When the bond yields tends to rise, all right, that is where most of the time you will see optimism in the economy, or the bond vigilantes are seeing optimism that comes into the economy. So that's why they actually sell their bonds, and that's why the bond yields go up, and that is where they invest in stocks and all of those things, start companies and all of those things, because it's no need for them to keep their money in government bonds, because that is a safe haven. So why do you need a safe haven when there's optimism in the economy? Now, a lot of traders don't like the story of the bond yields, but there's a very close relationship nowadays with the Nasdaq and the bond yields. Now, if there's a risk to the economy or the global economy, then what normally happens, bond prices go up and yields drop, which I can't say that is actually the case of today, but the bond yields actually, the bond prices go up and the bond yields drop, because there's normally a risk that comes, whether it's a recession or war or those type of things. Then normally your bond prices go up because people are buying bonds because there's fear in the market, and that normally drops actually the bond yields. Now, the other thing that goes with growth is actually inflation. Now, when inflation goes up, that is where we know now that people have money, people are spending, demand for products are high, and that's why inflation is going up. Now, inflation is actually going up quite steeply here, and you can see there's actually quite a toll. It looks like inflation is actually gaining its peak, but this is what happened in the beginning of this year. Inflation actually went up quite strongly, and that is where the bond yields also went up, because the bond vigilantes were selling their bonds, and that's why bond yields were going up sharply. That is where the dollar actually came out, which was to me actually strange, because the dollar went up according to the textbook or according to normal market reactions. When the bond yields are going up, then normally the dollar goes down. Because there's optimism in the world, and who wants to put their money into a safe haven? So I was thinking literally the Nasdaq's behavior would be the same. Although I didn't trade with the Nasdaq, I was more trading with your Australian, New Zealand dollar, and I thought that the New Zealand and Australian dollar would go up because the bond yields were rising and there's optimism in the world. Commodities are going up. That is what I was thinking. And then the bloody bastard did the opposite, the market, and that is where I still lick my wounds until this day. But I learned something actually very, very valuable when the reaction of the bond yield is so sharply of what happened in March. And this is what you must not forget. When you have that sharp movement up of the bond yields, that is where you know that something is wrong. People are taking out their money out of bonds because they see optimism, and that sharpness in the reaction actually created that the dollar actually went up, because the market was thinking there's something wrong because inflation were too high. Fine enough, I took my losses. I learned something. I still licked my wounds from that. Now, if you look at this behavior of the inflation, this is where actually when it went up, and I see actually it's starting now to tilt, it's not actually so sharply up. This is where bond yields started to drop, all right? Because there was no fear of inflation anymore. So that is where, I will not say a fear, not a fear of inflation. People are still talking about inflation, but the market seems to like, inflation will be transitory, because it's actually now gaining. For me, it looks like it reaches peak, and that's why bond yields are actually coming down, and that is where the Nasdaq is actually basically benefiting from that. So how is the Nasdaq benefiting from this when bond yields are dropping? Because when bond yields are dropping, it means that bond prices are going up, and if bond prices go up, it means that there's something is about to go down, a recession or war or something. So how is this possible? And that was for me also the question at the beginning of this year, but I will answer you now. the thing is that when bond yields are dropping, they actually think that interest rates will stay low because inflation is about to drop. So inflation is low, bond yields are low. So there's no threat of actually an interest rate hike. This is what they think. All right. So interest rates will not be a problem because inflation is dropping. So that's why bond yields are dropping. So interest rates will stay low for longer. And that's why actually you have the situation where the Nasdaq is rising. Now, very importantly with the Nasdaq, the Nasdaq, the guys that are in innovation and all of those things, like startups, what's his name, Bezos, that went to space and all of those things, that cost a lot of money. And with borrowing so low, that is where all the tech companies can take loans at cheap rates and start up their tech companies. And that is actually the benefit of the Nasdaq, is that cheap borrowing that actually currently happening. Now, very importantly, as you can see here, this is the interest rates in red. All right. So the interest rates in red, as you can see, that when the bond yields were high up, all right, that is where they lift up the interest rates. And when you see when bond yields started to drop, that is where you see interest rates also started to drop. So there's a strong correlation between the bond yields. If the bond yields goes up, strongly up, that is where they will lift up the interest rates. And obviously for interest rates to go up, inflation needs first to pick up. So inflation picks up, interest rates go up, bond yields actually later on will start maybe to go down, but normally that is the indication. Inflation goes up, bond yields goes up, interest rates follow afterwards, and that is where you will maybe see actually the Nasdaq will go down. Also in this case now, you have interest rates that are flat, even though inflation is going up. They just think that inflation will be transitory. There's no need actually to lift up the interest rates. So that is actually beneficial for the Nasdaq. And that's why I think that although the Nasdaq moved over 15,000, if interest rates stay so low and inflation is transitory and bond yields are dropping, and I think the Nasdaq will actually go further up. 15,000 is maybe now stiff where it is now. But I think if everything stays as it is, with bond yields are dropping and inflation is really becoming transitory, then I think the Nasdaq might push over 15,000 and go towards the 16,000 mark if everything stays as it is. While it looks like bond yields might drop further down, that will definitely be good for the Nasdaq if bond yields can drop a bit more, and hopefully there's no recession or bomb that blasts or something. So that is it from my side for today. Have a lovely trading day, and don't forget 2:30 is actually the Canadian news that will come out. And please don't forget to subscribe to my YouTube page. And also, as I said, you can always drop your comments and I will answer them on the live show. That's it from my side. Have a lovely weekend, a lovely Friday, and I will see you guys on Monday at the same time at 1 o'clock. Bye-bye.